Now that we have learned about the function and the structure of an origination team, let's turn our attention to sales, trading, and research, the sell-side parties active in secondary markets. As a refresher, here's another focused view of our initial organizational diagram. This time, we zoom up on the capital markets, sales, trading, and research portion. These are the groups that we are going to discuss in this upcoming chapter. In our first chapter, we focused on understanding the role, function, and structure of the group that helps corporate clients raise capital by issuing new bonds or stocks. Now we are going to take this process a step further. In this chapter, we will focus on understanding the parties involved in secondary markets, essentially answering the question, what happens after new issues are sold? Once the corporate client gets their money and the securities are in investors' hands, who is involved afterwards? To answer, let's start drawing a parallel from our previous chapter on origination. Origination is to primary markets and corporates, as sales, trading, and research are to secondary markets and the buy side. Together, sales, trading, and research offer their clients with value by providing liquidity, granting access to live market insights from real-time trading data, as well as by publishing deep data analysis and insights on a regular basis. These are the highlights of an entire department's efforts, though. So let's take a look at how each of sales, trading, and research contribute to value creation for clients in more detail. Let's start with sales. The sales team act as gatekeepers to the bank for institutional investors. As a result, the sales team is referred to as the client-facing group. When salespeople speak about clients that they manage, they will say that they, quote, cover these folks. For example, if I am a director of credit sales at a bank and my client base are mainly pension funds, I would say that I cover pensions. In addition to providing market quotes and sharing live market insights from traders, each salesperson will manage and coordinate access to the resources available at the firm for their clients. This ranges from coordinating meetings with research analysts to arranging discussions on markets with traders, as well as onboarding clients to ensure that they have all the appropriate agreements in place to trade with a bank. In essence, salespeople effectively own the relationship with the buy side that the investment bank has. Now, trading. Just as sales team members spend the vast majority of their time talking to clients and essentially facing clients, traders are market-facing. They look at markets all day long. On the odd occasion, they will speak directly with a client to support a salesperson and ultimately sell more business for the bank. However, this is not a regular activity that a trader engages in. Typically, traders are focused on being a market maker, quoting what price and in what volume they would buy and sell securities at to service clients while optimizing profitability for the bank. Last but not least, research. This team supports both sales and trading directly and indirectly, and in this respect, the role of a research team member is neither directly client nor market-facing, but rather a hybrid of both. They have the combined knowledge of their sales and trading team and are sometimes client-facing. Ultimately, they provide value to clients by publishing deep analysis and commentary that is one-off, ad hoc, as well as regularly updated. That said, research will cover whole industries as well as specific companies. This means that they will publish deep analysis on the technology, media, and telecom sector, for example, as well as reports specifically on Amazon and the research team's view on Amazon's credit fundamentals. Finally, one more example of a way that research provides value to clients by publishing deep analysis and commentary is that research analysts as well as associates know market flow from the bank's traders, and they combine these market insights with their deep knowledge of companies and published trade ideas that are incredibly well informed. Research analysts will know when risk builds up and needs to be sold out of a trader's books, and when combined with their industry and company-specific knowledge, they can generate attractive trade ideas based on securities cheapening or richening due to client flows as well as fundamental change. Let's turn to a visual here. This is essentially what a typical trading floor will look like. Depending on where you are in the world, this diagram will scale with the size of the financial market. For example, in New York, this will be a large football field-like experience to take in visually, say at a Goldman Sachs or JP Morgan. In London and Japan, Barclays and Nomura respectively will also be very large. Given the heavy amount of interdependency that sales, trading, and research have, it's very important that the way that these functional teams are structured and set up physically within a firm is conducive of sharing information quickly, efficiently, and effectively. So taking a look at our drawing here. In sales and trading, each role is the intersection of two parts, function and product. For example, there may be a managing director of corporate bond sales, and then the table behind them will be a trading desk headed up by a managing director of corporate bond trading. There may also be a director of FX sales as well as a director of FX trading in another portion of the room. Now, the division in research is much more macro. The research team is typically product-based. However, at larger banks, it may be an intersection of industry as well as product. Typically, however, it will be just debt and equity. Lastly, on this diagram, you will notice that our ethics wall is right in the middle, which is either a physical wall, large piece of glass, or just a large space that divides the room. And it separates sales and trading from origination so that the origination team does not share private information before it becomes public to the rest of the world. Now, research can sit on either side, but it typically just depends on where there is best space available. Now that we have seen how trading, the corporate ladder is structured very similar to investment banking. However, it is important to note that the actual work is dramatically different, with significantly less rigorous use of both PowerPoint and Excel in sales and trading. As the titles grow more senior, the main aspect of the job that changes in sales is that you go from supporting the internal team members and managing the smallest of clients to supporting external clients and managing progressively larger business clients. In trading, it moves from assisting a more senior trader to fully managing your own books and product. In research, by contrast, there are far fewer titles to step through, and the change in daily work echoes similar sentiment. It is also worth noting that this is the one that reverses the title and seniority relationship that we're used to seeing, with analyst being the most senior and associate being the entry level. At the associate level, a research associate will be maintaining large databases and assisting in compiling and analyzing the data that analysts need to produce their reports. Associates will generally produce more internal reports and updates, whereas analysts will focus on producing the rigorous analysis that gets sent out to clients on the buy side, such as trade ideas, in addition to hosting actual in-person meetings with these buy-side clients. Now, without further ado, let's dive right into a day in the life of all three of these units.